Hey, welcome back to Tips of Financial Suit. Thank you everyone to go check out the video again today. Mortgage continue to be the lowest of all time. Still, a lot of clients doesn't understand much about how interest rate actually works. So I want to bring that attention, that detail to you guys today. What exactly kind of interest rate you can get when you're getting the mortgage? Here you are looking for a home and you go try to get a pre-approval from different lenders to compare rates. Of course, you should compare rates. However, how do you even compare it correctly? If you get an interest rate estimate from this person A today, and then tomorrow you go to the person B, that's not apple to apple comparisons, okay? So when they give you an interest rate, usually in the mortgage term, they call it at par, ATPAR. What does that mean? Is when you given that interest rate, beside title fees, appraisal fees and everything, there's one fee that called lender points or lender credit. The reason is say that at par, meaning your lender point and your lender credit is zero. You don't have to pay additionals, or in the correct term, you don't have to buy down the interest rate. Or you don't get any money back from the lender, which is the lender credit, if you go with high interest rate. Technically, from our professional point, when we fighting the quote for you, we are plunging all the criteria, and it came up with a list of interest rate. And we will look for the one that said zero lender point and give it to you and say, hey, with this criteria you're giving us at par or at zero lender point, this is what you get. However, you have the option to go lower or higher, depend on your situation. For example, sometimes you need help with closing costs. So if the interest rate still makes sense and you get some lender credit back for a couple $1,000 and help with closing costs, maybe that's a better option than just go with at par. Or sometimes if you know you're gonna live in the house for a long time, 10 years, 20 years, or the whole term, 30 years, paying additional $1,000 or $2,000 to lower your interest rate could help you save tens of thousands of dollars on interest rate in the long term. So if you don't know which one makes better sense, talk to your lender, talk to your loan officer so they can help you looking at different options so you can make the right decision when it comes to interest rate. And also it also help you compare interest rate properly as well. Just because someone say, hey, I can give you very low interest rate does not mean that at par. Okay, so the good question to ask is, at what cost I got that interest rate? I'm gonna leave you with that knowledge today, and hopefully that will help you shop for the right interest rate with the right loan officer. And of course, remember, beside interest rate, there are many, many other items along with, for example, turn time, customer service, responsive time, all of those. And remember, cheap, good, and fast does not go all along in one deal. You can only choose 2 out of 3, okay? So again, thank you for checking out Tip of Financial Suit. See you guys next time. If you like what you see, feel free to comment below, send me a DM. Wanna hear more about different informations? Keep checking out our video, like, subscribe, hit the bell notification. Again, welcome to Tip of Financial Suit.